Good afternoon. I want to talk a little bit about low-hanging fruit when it comes to the trading game. A lot of people really are looking to pick up every single trade again, and I think one of the biggest problems I see with traders, both young, old, new, to the business or been in the business for a long time, is they really feel like they have to participate all the time. There's a number of ways you can make money in the markets. There's really thousands, millions of ways, if you will. But what are the low-hanging ways or the low-hanging fruit that you can utilize in your trading to generate income on a regular basis without taking great risk? And that's really what it comes down to, I think, and where most people struggle. This is not a casino, and if you want to go to a casino and blow a couple $100s on the one-armed bandits, or you want to play blackjack for $15 a hand, set a limit, leave, that's fine. That's one way to play those games. When it comes to trading, it's very similar. Sometimes due to the time in the market, where we are, what day, what month, markets behave differently, and you really need to consider what works best for you as far as the low-hanging fruit. What time of day, what days work best, what vehicles to trade, what setups. Once you do that, look for those setups and know those intimately, one after the other, before you go on to the higher fruit, if you will. Day trading, swing trading, they're two different things. You really need to be well capitalized to be able to swing for more than just 12 hours. But not that big. You can trade very small and still be very successful trading smaller lots on the futures game and swing trading. So figure out what works for you. What is that low-lying fruit that generates income on a regular basis, and stick to that. Stick to a game plan. I think where people get in trouble all the time, whether it's portfolio managers down to the smaller independent trader, is they style drift. What works for you should work consistently over time. There will be times when it doesn't work, depending on where the volatility is in the market, depending on which way the market is trending, up, down, sideways. And you need to understand the differences in the different market conditions to generate that low-lying fruit. In high volatility times, you're going to have more opportunities. Low volatility, you're going to have less opportunities. And in course, I tend to say low volatility, I trade a lot smaller because I know the volatility is going to come back. And when the volatility comes back, I tend to trade a little bit bigger because I'm going to have more opportunities. So you need to give yourself an opportunity every day to find that low-hanging fruit to drive income into your book. This is a business. That is your revenue, so to speak, is making profitable trades more than you make losing trades. Overtrading, again, creates a situation where even if you're trading break even, but you're trading too much, that low-lying fruit becomes more difficult to attain because your commissions and your brokerage fees are going to eat into any possible profits even at a break-even level. So keep this in mind. Focus on the low-lying fruit. You don't need to make every trade every single day, and that's part of this business. So get used to it. Find out what that low-lying fruit is for you, and take it every day and take a big bite.